Welcome, everybody, and Happy New Year. Welcome to the Trading with Ashley show. I want to first say a big thank you to my trading community, a group of members that I trained in boot camp how to sell options. And they sent me the most beautiful bouquet of flowers, and I am so thankful. I truly know without a doubt I have the nicest, most kind hearted group of traders that I work with every day. And when you're experiencing tough days in the stock market, it helps so much to be surrounded by like minded, kind hearted, very smart people. So I just want to thank all of my community members for all the wonderful things you do every day to help each other and to support everything everyone's trying to do. And that's just learn how to increase their trading knowledge and make a better life for themselves through trading. So today, what we are going to talk about is one of my favorite subjects, Palantir. There are so many ways to trade Palantir, but I have selected for you the top 5 ways that I like to trade Palantir, and I'm going to show you how to do each and every one so that you can start to enjoy getting into this lucrative game of trading. And there's a variety. The way I'm going to teach you how to trade Palantir will allow someone of any account size to get in the game. And when you are learning how to trade, it's actually putting real money to work that is going to make the difference and help you learn. I definitely encourage people to paper trade as they're learning. But let's face it, you don't pay really close attention until you have real skin in the game, real money that you're being put to work. And if that money is increasing in value, it makes you super excited. You're paying close attention so that you can repeat that process. But if you end up having a losing trade, it's really kind of cool what happens. That's what helps you learn. Because when you are actually losing money, as awful as that sounds, it does release a chemical in your brain that helps you to remember what's happening and helps you to know not to repeat those same mistakes again. Something you just can't get from paper trading. And so I never want anyone to blow up their accounts, but if you're starting to trade, you need to put just a small amount of money in play so that you can pay close attention and better understand what's happening as the trade is either working in your favor or working against you. All right, let's go get into the details. I'm going to show you all the different ways I like to trade Palantir. The first way I plan to trade Palantir this year is the simplest, and anybody can do this with any account size. So I like to do a dollar cost average dynamic with Palantir. And as much as it oscillates up and down, you can really get some great deals on it. So when we are in the Robinhood platform, this is the platform I use to dollar cost average. And let me show you how this works so that you can actually set this up for yourself. You can see right here that with my dollar cost average process, I have now accumulated 289 shares. The average cost is $42.02. Now, this is with buying $100 a day of Palantir. You can adjust that to any level that you're actually comfortable with. And it has produced a total return of almost $11,000 since I've actually started this process. Let me take you through the keystrokes so that you know how to set this up. The way you want to do this is you go up to your account in the top right-hand corner, and then you come down to reoccurring investments. Once you click this on, you can adjust accordingly. But you'll see right here, I have it set to purchase Palantir every day at $100. Now, when you expand this, it shows you the progress you've made. So my average price from doing this is $46.91, and currently it's sitting almost double that amount, which is pretty exciting. Now, the way that you can actually get even better pricing is on days that you notice that the stock is dipping, then you can actually go double up your buy, and that will lower your average price too. However, what you're seeing here is without me doing that. It's just a good practice to get into if you want to lower your average cost. And I really like how Robinhood sets this up. They actually explain to you how much you are paying, how much higher your trade has gone because of dollar cost averaging, and what you've invested and then what you will invest invest in the future if you keep this up. So that's one of my best ways and easiest ways, and I don't even think about it. And because it comes out of my account automatically, it's not like I get used to having those funds available to spend. So that's helpful for those of you that are on a tight budget and you want to actually set your budget and just set it and forget it. A second way to play Palantir is the buy and hold method. So it's actually not trading at all. It's simply accumulating the shares and holding on to them for future price appreciation. Here you can see I have 5,000 shares. Now these shares I accumulated a while back. The average on this lot of shares is about $27.50. And I'm glad I've left it alone to appreciate, because you can see right here, I have an unrealized gain of over $260,000. And this is the beauty of buy and hold. You don't have to worry about your shares being called away because you sold calls that are too low, too close to the money. You just let this appreciate. Another thing that works well is if you have a buy and hold position like I do, you are able to implement the next strategy that I'm going to share with you, and you are able to implement it without fear, because a lot of trading has to do with emotion. And if you're fearful of your stocks being called away from selling covered calls, then you end up working against yourself. So I like to keep a separate account where I just accumulate and allow it to appreciate. And that allows me to freely do the wheel strategy. And I do that in a completely different account. I'm about to show you that now. Now, running the wheel strategy on Palantir is a lot of fun because there's great premiums with the stock, and because I believe in the future it's going to continue to rise, I don't have fear of assignment, and that has served me well. You can see here I had actually sold 6 contracts, and I had been collecting premium for quite some time. Finally, I got assigned when the stock was at around the $63 mark, which I've held on to these. This is great because now it's appreciated already almost $10,000, this position alone, and I have been selling covered calls against it. Now, one thing is for sure, I do not go out too far with Palantir. Now, you can see right here, I actually sold the $90 strike price covered call, but I ensured I didn't go out too far. I made it expire on January the 17th because if this strike price is breached and I decide to roll the trade, if I don't go out too far, I have that luxury. And also, if the shares are called away, I don't worry about it because they're called away at a high enough price where I feel like I could reaccumulate them through selling aggressive puts that's lower than $90 or at the $90 strike, which that would provide some wonderful premium. So let me take you to a chart and let me show you why I selected the $90 call strike for a few weeks away. I am on the Yahoo Finance charts. I'm actually looking at the 6-month chart, and I have populated the Bollinger Band, and this helps me when I'm trying to make decisions on where I sell a call, a covered call, or where I sell a put. Now, if you look right here on the band, the top of this band is 83. So I went well above that. I actually went to the $90 strike a few weeks out. And the reason I do that is if my shares are called away at that $90 strike, there's a good chance that it will pull down and I'll be able to reaccumulate them lower than 90. Well, why is that? Well, it's the reason that is you've got a lot of people that have Palantir that they are either operating the wheel strategy, they're swing trading it, or they might even be employees that had the stock from being a company employee. And once it reaches certain levels, they want to enjoy the appreciation. So they will sell it at certain levels. And this gives you a little clue down here. You see the RSI is at 62. Once this gets closer up to around 70, that is a point where it's considered overbought at that point. And there's usually selling pressure when that happens, and that will allow the stock to be sold, and then it'll come down a little, and then you can reaccumulate. And so the fact that we're approaching that, if we were to get up to that $90 level where I sold the call, more than likely this will be at 70 or higher, and it would be a perfect time to try to reaccumulate on the pullback. If you're operating the wheel strategy, your next question is going to be, okay, thanks, Ashley, my shares were called away. I want to sell puts. Where do I sell puts? Well, that's where I look at the middle of this band. Once Palantir pulls back and we are closer to the middle of the band, it's a great time to start selling puts again, as long as this RSI is over 50. If it's over 50, I like to use the middle of the band as a support. And you can see it likes to bounce off of this 20-day moving average before it heads back up. And so you could aggressively, let's say those shares were called away at 90, no problem. I'll start selling puts again right here when it's pulling back. Maybe I'll sell them at the $76 level. Maybe I'll even go up as high as 78, because if they're called away at 90, that leaves a lot of room in between. And so this is a really good way to operate the wheel. And if your shares are called away, you're usually not bashful about using aggressive strike prices, because you're getting your shares back lower than they were called away. Now, if this RSI is ever under 50, then you want to change up your trading style a little. You would want to shoot for more or less the bottom of the band. And if we lose the bottom of the band and it comes down, you're going to start to want to look at your moving averages. Here's your 50-day. Under that, you have your 100 and then your 200-day. And the further down this goes, the stronger these moving averages are set for a bounce. So that's the way you do it. And if you end up not having your shares called away at that $90 level, let's say we get to the beginning of next week and we're nowhere near 90. In fact, we've pulled back. I can always pull down my strike price closer to the action to get a little bit more premium out of the trade. And I know you don't hear about that a lot, but you can roll down a covered call and enjoy more premium that way and increase the chance that you will have your shares called away in profit. The next strategy I want to share with you is leaps. So what is a leap? Basically, it's just a call option purchased a year out or more. And I like this because it allows you to get in the game without the capital to buy 100 shares. Leaps are typically either a half or a third of the price of the actual stock, but it allows you to enjoy the movement of the stock. So let's take a look at some leaps that I had purchased. You can see right here, I had purchased the $20 call option expiring in January of 2026. At the time, I had purchased 5 of those, and they are now worth $61 a share. But when I actually purchased these, they were trading at about $10 a share. So these have appreciated $25,000, and I still have a year left in the life of this leaps. So leaps are a wonderful way to build your wealth with a fraction of the cost. So at the time, if I was going to buy the shares of Pltr, 500 of them, at the time Pltr was trading at about $30 a share. So that would have cost me around $15,000 to buy 500 shares, but instead I purchased leaps at $10 a share, and that only cost me $5,000. And so leaps are a wonderful way if you believe that the stock is going to be trading considerably higher. Now, if you are going to buy a leaps, you want to do it on a red day for a stock or when you've seen a pullback. And that typically happens when the market pulls back, or sometimes you see these analysts come out with what I call a hit job on a stock, and they will lower the price target or they'll question the current pricing as overvalued. That's the perfect time to actually go in and buy a leaps. Now, the final way that I like to trade Pltr is an abbreviated version of the leaps. Leaps are intended to be held for a longer period of time. Actually, you paid extra money to hold that leap for a longer period of time. But if you have a trading personality like me, you like to take profit along the way. So let me introduce to you skips. It's a term that I actually coined a phrase for. It's a shorter term call option, but not so short that you have to deal with aggressive time decay. So a skip, and it stands in my book for safely keep increasing profits, because you're taking profits along the way. And it is defined in my book as a call option that is 3 to about 9 months out. Now, I like to stagger my skips so that I can take profit along the way as a stock moves up. And knowing that I have these shorter term call options to take profit on, it allows me to let the leap continue to run unencumbered. So here's a great example. You see right here, these are March call options that I purchased. There's 3 of them. And at the time of purchase, they were $12.64. Well, they've already appreciated up to $20.55, which is a profit of $2,373. Now, I will more than likely cash this in. I bought it initially, so I will sell to close as we get closer to about a month and a half out from the expiration date. And the reason is that 45-day mark is pretty important because that's when the time decay picks up and starts eating away at your profit aggressively. So I like to close these out either a few months before or at least a month and a half before, and that forces me to take the profit. Now, once I close this out, I'll wait for another pullback, and then I'll buy another round of these skips that are either 3 to 9 months out. So I can continue to take profit along the way until we get to closer to the expiration date of the leaps. I hope you found that helpful and it opens up your eyes to all the different various ways of trading. And one of the best things you can do as a new trader is to try a variety of styles of trading until you find one that you're really comfortable with and you seem to be really consistent at making money with. If you want to be part of a trading community that can help you refine all of your trading skills, consider joining our Discord community. We have a variety of different entry points depending on your account size. But the main thing is you need to take the very first step and actually do the leading task of starting to put money in the market. If I can help you along the way, it would be an honor to do so. Remember, if you're with me, trading with Ashley, there is no trader left behind. Now, obviously, you watched this video because you like trading Palantir, so I've selected the perfect video that's going to give you a little bit more detail on how to sell covered calls on Palantir. You can find that right here.